start with Adnan's going to spend the next. Ed, can you give us 30 minutes?
Yes.
Okay, so folks, quarter two, Ed's done at 10:15. We have to let him go. He'll give us that 30 minutes, and we really appreciate that. And the last 15 minutes we'll spend with us. So what we're going to do is we're going to open up. Has everyone met Ed before or Adnan before? Has been on a call with Adnan before? Anybody not? Okay, so Adnan, do you want to talk a little bit about yourself? I'm going to mute Adnan. You just go a little bit about yourself, and then you folks can start with the legal questions, and he'll be more than happy to answer the questions as.
Sure. Okay. Yeah. Sure. Yes, but I will keep it short and sweet because I prefer to spend the time on answering questions than talking about myself. I'm a corporate commercial lawyer, a business lawyer, practicing exclusively in the area of business law. I've been practicing for about 15 years. I've got experience in a variety of different areas, including real estate investment, including the three corporate tier structure. Whether it's retail, wholesale, commercial, residential, and that's just part of my practice. My practice is a general corporate commercial practice, so I deal with a lot of different other issues as well related to business law, contract law, corporate commercial matters. That's sort of my practice in a nutshell. And I'm happy to answer any contract-related or business law-related questions related to real estate investment that you guys might have. Did everybody hear that? Oh, okay. All right. Yeah. So if anybody has any questions, I'm happy to answer them. I guess we'll wait to see. We see something pop up on the screen there. And if not, Heis, you can jump in.
All right, folks. So this is your opportunity. If you have any contract questions or even about the three-tier structure or what you need, if you haven't set up, Adnan's obviously a source. I'll give you his contact information at the end if that's okay.
Having said if you want to, sorry, Sammy. If you want to do that, maybe at the end of the conversation, put out my my contact information. That's great. I know. I believe that some of the people on here may have questions that are of a confidential nature, and they'd prefer not to have it recorded or two in this group here. So I think at the end of this meeting, Sam will set out my contact particulars, and you're welcome to contact me in confidence and ask any questions that you might have. So the first question is, should we set up a three-tier company even before we have any deals in place? And this question comes up a lot, not only in the context of real estate investment, but in the context of a variety of other business ventures. So, I mean, I guess the issue really is, so the issue is one of the issues, I guess, is the expense associated with setting up the three-tier structure, and the risk is that that one goes through the expense of setting up the three-tier structure, the three separate corporate entities, and then for whatever reason at some point after that doesn't engage in real estate investment and now has expended a small fortune on setting up this investment structure, and they won't be able to use it. I mean, if they have other business interests, certainly they could use the corporations for some other business interests, but you don't want to find yourself in a situation where you've spent any money in anticipation of engaging in some business venture and then not engaging in that business venture. So what I would recommend is if you're relatively certain that you're going to be engaging in this sort of exercise and that you may even have some locations in mind, then it's not a bad idea to have the structure in place so you can focus on other things related to the investment exercise. But if you're on the fence about this or you're not sure about this, I don't think it makes sense. It probably doesn't make sense to go through the expense of setting up the structure until you're fairly certain that this is an exercise that you're going to engage in. Zachary, I would like to set up a 3-tier account and use it to invest. Sorry, Justin and Jamie had a question, Zachary. I'll get to your question first. What do you think about having a wholesale-specific corporation? I don't think it's necessary. You're not actually going to own any property, right? You're entering, excuse me, you're going to be entering into agreements in trust and then assigning those agreements over, so the exposure to liability is limited. The cost of an additional wholesale corporation, the incremental cost, I guess, isn't sort of overwhelming. Having said that, I don't think it's necessary. I wouldn't characterize it as a mistake if you did, but I don't think it's necessary. Out of an abundance of caution, if you're extremely risk averse, it may make sense just to help you sleep better at night, but from strictly speaking, a legal perspective, I don't think it's necessary. Now we get to Zachary. I'd like to set up a 3-tier corporate structure and use it to invest in the U.S. Is there... Sorry, I lost that question there. I'd like to set up... This is Zachary from Vancouver. I'd like to set up a 3-tier corporate structure and use it to invest in the U.S. and U.K. Is there any way to set it up and use it internationally? So far as I know, I don't know anything about U.S. and U.K. law. I only know about Canadian law. I think there are a couple of issues here. One, I think you need to check with the jurisdiction in which you're intending to invest, U.S. and U.K., and determine what laws they have in connection with foreign investment. I don't anticipate that you'd find many obstacles, but you would, I mean, one would be negligent, I think, if they didn't consult local counsel in order to determine what regulations there are. And then there's also the question of the tax consequences, right? You want to make sure that you set up your ownership structure in the most tax efficient way possible. And if you're investing in countries outside of Canada, there may be alternative structures that may be more beneficial from a tax perspective and still offer you the same liability protection that an Ontario or Canadian company would provide. When is the best to set it up? I have 2 rentals at the moment. Well, I don't know what you mean by this. Is D, the question that's right after Zachary. I don't know what you mean when you say you have 2 rentals at the moment. If by that you mean you own these 2 rentals in your individual capacity, you as a person, I'd say set it up now, right? If you have 2 that you're contemplating buying but not sure about, maybe wait until you get to that point where you're sure you got a firm deal, and then you go ahead. We can do it. Lawyers can do it. We can do it. We do it all the time relatively quickly. So long as we've got all the information that we need, we can set up, we can bring the corporation into existence relatively quickly, and then undertake the organizational stage, which is one of the steps in the process at some later point in time. But once we file articles of incorporation, you bring the corporations into existence so they can start operating a business. Would wholesale transactions not just help to build financial history for I mean, I wouldn't say just help to build financial history. I mean, they're a means to an end themselves, right? Wholesaling, I mean, and by that I mean they're a means to, I mean, it ought to be a profit center, right? I mean, you're not doing it simply to build it, transactional history and some credit, right? I mean, sure, I think that's sort of an incident that flows from it, but I wouldn't characterize that, Ryan, as that's, I mean, the way the question is worded, it almost sounds like that's solely why you do it. I wouldn't characterize it that way. And then help it qualify for its own financial products down the road. I mean, sure, that may be a consequence that flows from it, but again, I don't think that wouldn't be, in my mind, the purpose for engaging in wholesaling. I think it's like any other exercise. You're trying to reap the rewards of the gap between the price that you agreed to pay and the price that you're selling, right?
So yeah, you
Sure,
you
go
will
ahead.
build up some transactional history. Sure, anything done in the business itself is gonna help with that transactional history. I think, and I don't want to speak for him, but I think what Adnan's expressing is that the corporation itself has a much broader reasoning to bring into existence, and that we want those corporations for two reasons: asset protection and tax relief. And the tax relief, I think some of the questions cross over into tax relief, and that would be an accounting question versus a legal question, and the scope beyond the scope maybe, but where myself or even Adnan would want to get into. But yeah, I mean, you would gain that benefit, being creating that profit center through doing wholesale deals. That would help you in creating history. With respect to what extent that would help you, that's again an accounting question. I think anything positive happening in those businesses are going to be good for you. I think what Adnan is trying to talk about mostly is the protection part of it, right? Is when we're doing wholesale, because we're never taking possession of that property. Technically, we are not, and physically, we're not taking possession of that property. We're limited in our exposure to, what are we going to get sued for? Now, we could get sued civilly if we write a bad contract, and this is why you want legal advice, or if somebody tries to force the purchase because we haven't written our contract properly. That could be, obviously that could be a problem that we'd want to face on with proper legal advice. Ultimately, with contracts and any agreements, we want to make sure, regardless if I'm reviewing them, I always tell everyone that you need a lawyer to review it too for you, right? Your power team needs to be your eyes and your ears of your business. You need to give direction to execute those. But ultimately, the power team members are the ones that are doing the heavy lifting of the business that we're in, which is very fortunate for us. So I think there's benefits on both sides, whether you do or you don't. The cost, obviously, of setting up the corporations is real. It's there. It's a write-off in itself for tax reasons, because it's part of setting up the business. To the extent of asset protection, I think, and Ed can speak more to it. It's just limited what you're going to gain from that for asset protection. For tax reasons, that'd be something we'd reserve for the accountants.
Okay. I'm just scrolling down to D. It looks like D says, yeah, I have two at the moment. So I'm interpreting that to mean that you own two properties at the moment right now. So, I mean, and your question above was, when do you set it up, I think? When is the best time to set it up? Well, for you, I think now, right? I mean, I think properly it ought to have been done even before you acquired these properties. But, I mean, you're in this room now, right? And you've got to deal with what you've got to deal with. So I think the sooner the better that you get them in there and you get them, the structure set up around them is as good as any time now. The sooner the better. Tyler and Jared from Kelowna say, how do you get properties that you already own into a corporation? Well, I mean, so from strictly speaking, from a legal perspective, it's simple, right? Let's assume, for the sake of this answer, that Tyler owns this property in his individual capacity. He'd incorporate these companies that form this three-tier structure, and he would enter into an agreement between himself and his corporation to transfer those properties to the corporation, the landholding corporation. Okay, so from a legal perspective, it's relatively straightforward, sort of your garden variety transfer. But there are tax implications that need to be addressed, right? And I mean, you're in Kelowna, I guess, so you're not in Ontario. You'd have to seek the advice. I mean, from a legal perspective, you can talk to a lawyer anywhere in Canada. From a tax perspective, you're best off to speak to somebody who's got but who is licensed to practice in BC. In Ontario, and I suspect that you've got sort of similar taxation we've got a tax called land transfer tax, which is essentially a tax that's paid anytime property is transferred, right? There are certain exclusions to that general rule, the general rule being that tax is paid anytime land is transferred. One of those exceptions to that general rule is in a situation like the one that you're describing now, where an individual owns property and is transferring property to a company that he's the shareholder of. The reason that there's an exception to that rule is obviously because the beneficial owner, the owner who's actually benefiting from the property, isn't changing. It's still Tyler, right? It's just the fact that Tyler's holding it in this separate legal person here, this corporate entity. So the law says in Ontario, I don't know that this applies in BC to be clear, but in Ontario the law says, you know what, we realize that although there's a legal transfer here, that the beneficial owner is the same. And there's a regime here where, and I'm not exactly sure, you'd have to talk to your accountant, but I think what you do here in Ontario is you would pay the amount that would be land transfer tax or a bond, either one, for a period of 2 years. So you pay what you otherwise would have paid as land transfer tax, and that money that you pay is held for a period of 2 years. And if at the end of that 2-year period you have the company to whom the property was transferred hasn't disposed of that property, you get your money back, right? Again, and the reasoning behind that is they don't want individuals to transfer property from themselves to a corporation, avoid the land transfer tax, and then transfer the property out at a profit, right? So that's one tax, land transfer tax. I suspect there's a similar tax. Tyler in BC, talk to an accountant in BC who knows about this sort of stuff. The other tax is, capital gains, right? To the extent that you are, to the extent that the value of the property on the date of transfer from you to the corporation is greater than the value of the property on the date that you acquired it, then you've made a gain, right? So, and the general rule under the Income Tax Act is the general rule, and there are always exceptions and carve-outs, but the general rule is anytime you sell property for more than you paid for it, you've made a gain, and on that gain you pay a tax, right? That's what the capital gain is. Depending on your situation, it may be a tax, it may be it may be income, it may be a capital gain. But anyways, for the purpose of your question here, how do you get properties that you already own into a corporation? There are certain provisions, and again, this is a tax question that you'd have to ask an accountant. I don't give tax advice. I'm not qualified to give tax advice. I'm a lawyer, but I can give you sort of these thoughts, right, that you can then hopefully flesh out with somebody, a tax accountant who's got a lot more knowledge, expertise, and experience than me. Okay, so we talked about the land transfer tax, now about the capital gain. There are certain provisions in the Income Tax Act, that's the tax that requires us to pay capital gains. There are certain provisions that will allow an individual to transfer assets from themselves to a corporation that they own wholly, or that they are majority shareholders of, on a tax-free basis. It's called these sorts of transactions, these tax-deferred transactions, are referred to as rollovers. And the idea behind it is that you get to roll your assets from you as an individual to a corporation, and although there's a gain, you get to defer that gain until the corporation disposes of the property. So you may have the ability to avoid all the taxes on the transfer from you from you to a corporation. So just really quickly, and I probably spent more time on this question than I should have, but anyways, really quickly, how do you transfer property? Back to Tyler's question, how do you transfer property? Simple from a legal perspective, like you transfer property in any other case. The real questions here are the tax questions. The land transfer tax, or the similar tax in BC that's payable on the transfer of property, and then the capital gains, each of which in Ontario you have an ability to avoid. Vince and Chewy. Will it be beneficial to own first property under your name and assign it to a corp after? It was recommended by a mortgage broker since we have enough capital. We are just starting out, and it will be a first property purchase. Beneficial from what perspective? Listen, I'm looking at it from a liability perspective, and your accountant's looking at it from a tax perspective. And from those perspectives, as far as I'm concerned, the three-tier structure is the best. I think the question that I would ask, would it be beneficial to own a first property under your name and assign it to a corporation after? I mean, again, if it's in the nature, if the benefit is in the nature of building some sort of credit history or something like that, perhaps you've got to concern yourself too with the assignment. So what you're saying here, Vince, will it be beneficial to own first property under your name and assign it to a corporation after? For everybody out there, what assignment means in law is a transfer. When you assign something, you transfer the rights associated with that something. If you're assigning to a corporation later, then the questions that we were just answering above for Tyler all apply, right? So you've got to worry about any capital gains taxes, again, a measurement of the value of the property on the date of acquisition versus the date of, you characterize it as an assignment, a transfer, and the land transfer tax, both of which you can, in certain cases, avoid, but you may not be able to. So, I mean, there are a lot of different sort of moving parts here. I wouldn't mind getting some information from your mortgage broker as to why they would think it's beneficial. I think it's probably because it makes you more easily qualified later on for a mortgage. I mean, I'm not sure. I mean, yeah, okay, I see what you're saying here for the down payment. Yeah, I mean, it's a question. I mean, again, I don't think it is. I mean, but listen, I'm looking at it, like I said, from the liability and the taxation perspective. They're looking at it from Corp would use the 20% and we don't have capital. Well, I mean, if you don't, I'm just looking at the last comment here from Vince and Chewy. I mean, if you can't do it in the corporation, then you just can't do it. I don't know that. I mean, it doesn't sound like based on what I'm reading here, if I'm reading this correctly, and I may not be, but that you have much choice. Ryan and Shefali, so are you suggesting that the property needs to be formally appraised? Listen, Ryan and Shefali, I mean, the answer is yes. Practically, is it always done? No. Could you not just state the same price in the transfer? Yeah, sure you could. I mean, listen, this is largely a self-reporting system, right? Not dissimilar to your tax returns, right? I mean, when I file my taxes, I could include, because, I mean, now everything's done, not everything, much of it is done electronically, so you don't even file any of your source documents with your returns, right? So there would be nothing to preclude me from including, donations of $25,000, right? And get,
Yeah, looks like excuse me. It looks like we lost him for a second. We'll let him try to get back on. It looks like he's out of the room, so we'll let him get a chance to get back in. I think the point he was trying to make was you can say whatever you want on your taxes. And it's a self-reporting system. That being said, obviously you could get audited if you're audited, and they see that there was a gain achieved. They could ask for those taxes, right? I think that in business it's best to do it as appropriate as possible, and that's what the guidance of an accountant, obviously. At the end of the day, you need to, whatever decisions you make with an accountant, with a professional, they need to defend that against CRA, right? If they're going to, tell you or give you that advice, they're the ones who have to stand up in front of CRA or to deal with that challenge. Ultimately, though, you're responsible for your own finances. So I think that it would be prudent and wise to just get the market price of the property and use that. Do you have to do a formal appraisal? It could be challenged, but if the market price, if this was estimated or done by another professional, there's no reason to doubt that unless the numbers don't match up with a real appraisal. we're talking about, you know, a situation where there was $100,000 difference in the market price or appraised price versus the transfer price. I think you would have a problem with CRA. You know, I think that it's best to always anticipate the meaning of what they're asking us to do. And if you have questions about it, again, that's where the professional comes in, is to you know, do it the way, err on that side of caution, I guess, is the message that I would give you. Does that answer all your questions? You guys good? Yeah, you know what I mean? I mean, it's just better, I think. I mean, this is it, right? We're always weary about giving specific advice in areas that we're not professionals in. I'm a professional, you know, I'm an investor. That's what I do. And I don't like to speak out of turn or outside the scope of what I know. I can speak about my experiences, but they're limited to me. I don't want to overstate that advice about what's been done for me or how it's been done with other individuals, just because everyone seems to have their own individual case. It's safer just to work with professionals. So we'll let Ed see if he can jump back on, or if we lost him for the night, which is possible. Does anybody have any questions, additional questions about this that I could possibly answer for you? How many of you would you like Ed's contact? I can at least do that. Let's see. Yeah, hold on one sec. That's his information there. He would be fine to practice any law. The one area that he, you know, and he'll tell you himself, is Quebec. He works with lawyers in Quebec. My suggestion to anybody who wants to work with Adnan, I can tell you this, is that if he can't help you in a certain area, he'll tell you, he'll advise you of such. But he can definitely take care of corporate law. As far as I know, across Canada, it's not a problem whatsoever. So I think you'll be fine to at least pose those questions to him, and he'll advise you if it's beyond the scope of what he can do for you. So yeah, I would ask the question. Best thing to do, and he'll tell you. But yeah, he's good across Canada. Any other questions in reference to the content that Adnan was speaking of, or any questions in reference to that? We're good? If you're good, type in yes in reference to that at least. We're all good? Okay. All right. Does anybody want to discuss anything on the call? I have one thing that I wanted to cover. But other than that, does anybody have a question? Any general questions? Anything? I think what I'm going to do is I'm going to bring Tart back next week for mortgage broker questions, financing questions. I think that's always a great topic for us. Let's see here. All right. Okay. Okay, so if we're good, I'm going to bring up Jared's working on something. Jared, is that all right if I share this with the group? Jared, you there? Yeah, you good? Are you share this then? You'd like me to share this with the group? We're going to talk about this? Yes, please. Okay. Okay, so okay, we got I have a couple that's sold a rent to own. Is thinking about a 10% vendor take back on a purchase price, but I need some clarification how that would work. They are willing to do a 10% or higher interest But what's the number of interest and how do I tell them what that means? I've got also info on a rent-to-own deal that I can send you later, and we'll talk about that first, rent-to-own. So you also asked me about being a hard money lender, correct? Okay. So with the rent to own, it's not really you're not doing interest on the actual property itself, right? So I need to ask Jared, is someone asking you to lend them money so they can buy a house, or someone who wants to do rent to own? Rent to own. Okay, so there is no 10% or higher interest. There's no interest in a rent to own. So the rent to own is, we have the non-refundable option consideration, which is 3 to 5%. Okay, and we have rent credits, whatever you want to call them. They're also non-refundable. Rent credits could be anywhere. They could be $100 to $1,000. So it's really about building a plan for them. So can you give me some clarification on the question you want to ask? Because the money they give you up front, there's no interest paid on that. The only kind of interest or number that we're looking at in the way of increase is appreciation. So appreciation could be, again, it could be 1%, could be 10% on the property itself, and that would be a compound or annualized increase per year on the term of the agreement. So if it's a 3-year term, we'd have 3 years where it would increase by 1% or up to 10% year over year. And that's really a question of what is the average increase on those properties in that particular area. Do you have any questions about that, Jared? Not so far? Okay. So with rent to own, right? Let's walk through that process, everybody. Okay. So what's the first thing we want? First thing we want to find is the what? What do we want to find first? The TV. What's the TV? The tenant buyer. We want to find the tenant buyer first. Okay. So we can market for them. We had some great success. Some students in Calgary, even Ontario, anywhere really. You can market for them and offer the opportunity for rent to own. From there, where do we go? We send the tenant buyer to who? Yes, excellent. Mortgage broker. So we send them to the mortgage broker to qualify them, and the mortgage broker is going to tell us, what do they need to do? How long will it take them to qualify, and how much will they qualify for? This is very important. In 3 years or 2 years, it's going to take them 3 years to get qualified, for their credit. This is what they can afford in 3 years. Now there's some math we got to do for the pricing of the current price versus the price 3 years from now. But the mortgage broker is going to tell you, hey, you know what? The person qualifies for $350,000 in 3 years. We got to work our way backwards, and what property today is going to be worth $350 in 3 years. Let's say that the appreciation is 5% a year. So if we start with a $300,000 property, it'd be 315, 330, 345. It'd be close to 350 in 3 years. We should be looking at a property that's 300,000 if we're using a 5% appreciation. Does everybody understand that? Make sense? Anybody have any questions about what I just said? It's okay if you do. That's step 2. right? Tenant buyer goes to the mortgage broker, finds out what he or she needs to do or what they need to do to qualify. Okay, that makes sense? Then where do they go? Then they go to the who? Where do they go next to? Yeah, the realtor, real estate agent. The real estate agent finds them a house that fits the criteria based on that mortgage broker, right? The mortgage broker said that they can afford whatever. Then they find them a house, and they find the house that they want. And then what happens? Then we negotiate. We negotiate the price, and before we negotiate the price, actually close on the price, what do we need from the tenant buyer? What does this tenant buyer need to give us before we close? Yeah, they got to give us the non-refundable option consideration before we close. That needs to be in hand before we close. Right? We need the non-refundable option consideration, so we need the option contract plus the lease contract in place before we take on that property. Does that make sense to everybody? Okay, so if we look at this as a process, we got about 10 minutes. So if we look at this as a process, okay, so we're going to, for the tenant buyer, could we have a series of questions, that we want them to have, the tenant buyer? Well, we'd like to what? We'd like to know what up front? We'd like to know, what do we need to know about the tenant buyer? What kind of key questions are we going to make sure that they can at least do before we start the process? Yep, down payment. Yep, what their cash flow is. They need to be employed. Yeah, they have to have income. They got to have income, and they got to have a down payment, right? We need to know that ahead of time. We need to know that. Now, what students are doing, which I think is a great idea, is they're charging $500 to $1,000 to run them through the process, their application, to process their application. Okay? So once you've asked them, do you have income? Do you have a down payment? And they say, yes, I do. This is the income that I make, and this is the down payment I make. And you explain to them the program. You say, to process your application, it's going to cost you $500. I need the $500 to run through this process. And this is for your time and to test how serious they are. Now, if they qualify, we can give them this money back. Everybody see that? If they qualify, we'll give them the money back. We'll say, you know what? That $500 will go to your non-refundable option consideration. Does that seem fair to everybody? Any questions or comments about that? See some questions, or somebody's typing in. Just want to give you a chance. If there's any comments or questions about that. Does this need to be stated in a legal document between you and the tenant buyer? Does what part need to be stated in a legal document? You mean the credit back? Is that what you mean? Yeah, absolutely. I would. If I was a tenant buyer, I'd want it in a document. Yeah, absolutely, Wayne. If I was a tenant buyer, I'd want that in a document. Say that you're going to give me the money back. I'd also want to state in the document this is an admin fee. It's non-refundable. If things don't work out, you're not getting this money back. Sierra, aren't you guys using a fee structure now? Sierra, you there? Aren't you using a fee structure right now? Okay. Okay. Yeah. So you're using, what are you charging right now, Sierra? Good. That's excellent. Good. Because if someone's not willing to give you the $500, then I mean, forget about it. The rent to own question. I have a tenant buyer that I'm about to send the mortgage. He's new to the country, makes good income, has 25 to put down. Question is, he wants to pay 10K per month to pay it down quickly. There isn't any value to this, is there? Do I take it and set it aside, or tell him just to pay 2,500 or put any 7,500 per month aside for when he buys? If he wants to give you the money, I mean, if he wants to do that, that's fine. That's fine. Absolutely, that's fine. I mean, that's obviously but this is what he needs to know, Timothy, is that money's non-refundable. It's non-refundable. Take it. It isn't an extra cash flow. I mean, it is initially, Timothy, but that's a question of numbers, right? That's a question of math. Like we can get, and me and Sierra worked on a deal like this where we were getting most of the money before the deal was even done. So at the end of the deal, that we took more than there was profit in the deal. So you can take the money and put it in escrow. I would take what's yours, the cash flow, or the amount you wanted. You have to do the numbers on it, and I put the rest in escrow to make sure it's there. But you don't want to exceed the total profit of the deal. Okay. Okay, so you can put that in escrow. If that's what your numbers say, put it in escrow. Like, put it aside. But the other money's yours. I mean, this is the thing, though, Timothy, is I mean, technically it's non-refundable and it's yours. You got to refund it. Now, you want to make sure that you have this money for this person. But at the same time, Timothy, I mean, you could use that money for other deals during the 3 years or 1 year or whatever you're using, right? You could use that money. No one could stop you from using the money unless something in the agreement says you can't. You could use that money. You could use that money. Basically, you're getting that extra money is, in one respect, you could look at it as a interest-free loan. Okay, so if someone asks you what exactly is a VTB and what's the benefit for them, how would you describe that to someone who has no idea about a mortgage? Great question. I like to introduce the language of, would you like to make some extra money on the mortgage? And they'll say inevitably, what does that mean? Say, well, what you can do is you could actually be like the bank. You can be profitable like the bank. You can make money like the bank does. Higher interest than you probably experienced in the past with your other investments, and you can be participating in this deal where you're earning 5% interest and have it secured with your property that we're purchasing. Does that make sense? Now the biggest thing with vendor financing, I think, is important is Tyler and Jared is to offer them something in respect. Offering something in trade for that. So what would you trade for a VTB, folks? What would you trade for a VTB? What can we trade for a VTB? A lower down payment, a higher purchase price. Yeah. When you say lower down payment, you mean we want the VTB, right? So we got to give them something. So typically it's a higher purchase price. Typically, we're offering a higher purchase price. So they're going to gain something out of that by giving us the VTB. Does that make sense, Tyler and Jared? Does that make sense? That's the seller, yes? The seller's willing to do a VTB at 10%. Is that right, Tyler? Jared? 10%? Okay, is that too high? Or is it too low? Or is it just right? What is that 10% too high? Any idea? Anybody want to comment? Is that too high to pay for a VTB? Excellent, excellent, excellent. Depends. It depends. Yes, perfect. There you go. It all depends. You're absolutely right. Excellent, excellent. The number itself doesn't matter. It could be 20%, it could be 30%. At the end of the day, Tyler and Jared, it has to make sense financially. So who cares? If it's 10%, it's 10%. That's what they want. Let's try to work a deal where they get 10%. So how much are they willing to put up as a VTB? What percentage? Or how much money are they willing to do a VTB for? Asking price is $269, willing to go to $249. Okay, and what is the amount that they're going to give as a VTB? So 10% of 249. Based on those numbers, they could give 20. So wait a minute. So Tyler, Jared, they're giving you a 10% VTB, or they're charging. They want to pay you interest of 10%. They want you to pay them interest of 10%. You mean they want to give you 10% VTB? You don't mean interest. Is that right? Oh, okay. That's great. That's awesome. That's 200. That's 24,900. I mean, that's excellent. That's excellent. Have you talked to a mortgage broker yet? Have you guys talked to a mortgage broker about this deal? Not quite yet. Okay. So this is what I would suggest, or anybody in this situation. There are lenders that will be fine with you putting up 10% in a VTB of 10%. Totally fine with that. So you go to a mortgage broker and you say, look, I got a VTB opportunity. They're going to put up 10. I'm going to put up 10%, and we're going to do the deal. And there'll be a lot of lenders will do that. A lot of lenders. So you don't have to put up 20 anymore. It's an investment property. They know it's an investment property. Many lenders will look at that as 10% is fine, and they'll put up 10%. The seller will put up 10%. So talk to a mortgage broker about this specific deal and find out what the requirements are to make this deal happen. Does that make sense? There you go. Awesome. Awesome, Sierra. Awesome. And this is what it is. This is exactly it. The team, right? The power team where you don't have to. This is awesome. To have someone to say, look, I found someone that can do this is great. So that's awesome. So Sierra, before we end the call, which will be in the next couple minutes, don't put up the email yet, or the contact, or your email. If somebody wants that contact, I'm going to do it when the recording stops, okay? So we'll hold off just for a second. Oh, you can send a private message? Okay, there you go. Does anybody else want that contact? Yeah, okay, hold on a second. Can I send a private message? Hold on. It is also a good idea to talk to the seller if they would be paying capital gains from the sale of the property is another attractive aspect of VTB, spreading out the profits. Avoid paying taxes in 1 year. Absolutely, Wayne. That's absolutely right. Yep, the tax benefit. Excellent point. Okay, so let's do this. I'm gonna wrap up the call because it's 10:33, and I gotta step off right now and close up the call. Is there any questions before we end the call? And I'll shut off the recording. Let Sierra throw up that contact or her contact. if you guys are interested in that mortgage broker's information. How many of you are interested in that mortgage broker's information? Is it just Dwayne and Nicole? Anybody else? Okay. All right. Okay, so let's do this. Sierra, wait till I'm done. Okay, hold on. Does anybody have any questions? Are we good? We're good till next week? Okay, so I'm going to ask you to do it one more week, please. I got a new group. Still, I'm working with them. I do an 8:30 call with them, and I don't want it to run over into your call. So we're going to go 9:45 next week again. The room will be open way before that, but 9:45 instead of 9:30. And then that following week, I'll bring them into the group with everybody else. I just want one more week with them one-on-one. Okay, so if you're good, type in yes. Okay, so I'm going to shut off the recording in 1 second here. Okay, just want to make sure everybody's good. Good. Yep, okay, so I'm going to shut off stay everybody. I'm going to shut off the recording, and then, Sierra, you can share.